Did you know that right now, millions of seniors across America are unknowingly putting their hard-earned savings at serious legal risk, simply by the way they deposit or withdraw their own money? It sounds almost impossible, doesn't it? You worked your whole life for that money. But here's the truth, there is a powerful IRS bank rule tied to the number $10,000, and in 2026, not knowing it could cost you everything. If you've ever moved large amounts of cash around, for any reason, this video was made specifically for you. Please stick around, because what you learn in the next few minutes could protect your finances, your freedom, and your peace of mind. And if you find this helpful, don't forget to hit that like button, subscribe so you never miss an update, and drop a comment below sharing your thoughts or questions. Now, let's pick up right where that hook left off, because this is genuinely one of the most important financial topics that rarely gets discussed in plain, honest English, especially for those of us who've spent decades building a life, raising families, and carefully saving every dollar we could. Let's start at the very beginning, so no one gets left behind. Back in 1970, the United States government passed something called the Bank Secrecy Act. Now, this wasn't designed to target everyday people like you and me. It was created to combat organized crime, drug trafficking, and money laundering, the kind of shadowy financial activity that was running rampant during that era. Think of it like the financial equivalent of the Neighborhood Watch program. Banks were essentially asked to become the government's eyes and ears whenever large sums of cash moved around. And the threshold they chose? $10,000. Here's how it works in the simplest terms possible. Every time someone deposits or withdraws more than $10,000 in physical cash at a bank or financial institution, that bank is legally required to file what's called a Currency Transaction Report, or CTR, with a federal agency known as the Financial Crimes Enforcement Network, often referred to as FinCEN. This happens automatically. You don't get a warning. You don't receive a letter asking your permission. The moment that transaction crosses the $10,000 line, the report is filed, and the federal government is notified. Just like that. Now here's something really important to understand, and I want you to pay close attention here. This rule is specifically about physical cash, coins and paper bills. If you write a personal check, use a wire transfer, or move money electronically between accounts, that doesn't automatically trigger a currency transaction report. The reason is simple. Those transactions already leave a digital paper trail that's easily traceable. It's the physical cash that raises flags, because cash, by its very nature, is harder to track once it leaves your hands. So far, this all might seem fairly reasonable, right? After all, most of us aren't drug lords or organized crime bosses. We're retirees, grandparents, small business owners, and hardworking Americans. So why should we worry? Well, here's where the story takes a very serious turn, and this is the part that catches so many good, honest, law-abiding seniors completely off guard. Many people, when they hear about the $10,000 reporting rule for the first time, have a very logical-sounding thought. They think, well, if depositing $10,000 triggers a report, I'll just make smaller deposits. I'll put in $3,000 here, $3,500 there, maybe $2,500 a few days later. Problem solved. It sounds smart. It sounds reasonable. But here's the terrifying truth, that strategy is a federal crime. It has a name, it's called structuring, and in 2026, it is being prosecuted more aggressively than ever before. Structuring means deliberately breaking up cash transactions specifically to avoid the $10,000 reporting threshold. And here's what makes this so dangerous for well-meaning seniors: you don't have to be hiding illegal money to be charged with structuring. Even if every single dollar you're depositing was earned completely legally, from your savings, from selling a car, from a family gift, if investigators determine that you intentionally kept your deposits below $10,000 to avoid detection, you can be charged with a federal crime. And in 2026, banks are using sophisticated artificial intelligence systems that flag these patterns almost instantly. A series of deposits of $3,000, $4,500, and $2,800 made over just a few weeks. Those AI systems catch it, and they flag it for investigation. The consequences are severe and, frankly, heartbreaking. The government has the power to seize your funds, even before you've been charged with anything, under civil asset forfeiture laws. That means the money you worked your entire life to save could be frozen or taken away while an investigation drags on for months or even years. And if you're already dealing with any back taxes or tax debt, crossing the $10,000 threshold can invite additional scrutiny that might affect things you'd never expect, like your passport renewal or federal tax liens being placed on your property. Now, let's talk about something that affects a smaller but growing group of seniors, those who have foreign bank accounts. Perhaps you have an account in another country from your working years abroad, or maybe you've inherited one from family overseas. Here's what you absolutely must know: if the combined balance of your foreign bank accounts exceeds $10,000 at any point during the year, even for just one day, you are legally required to file what's called an FBR, which stands for Foreign Bank Account Report. The penalties for failing to file an FBR are staggering. We're talking about fines that can reach tens of thousands of dollars, sometimes exceeding the value of the account itself. This is one of those rules that flies completely under the radar for most people, and yet the IRS has been intensifying its enforcement year after year. And for those of you who run a small business, maybe a home bakery, a craft shop, a consulting service, or any kind of side hustle that deals in cash, there's another layer to all of this you need to be aware of. If a single customer pays you more than $10,000 in cash, you are required to file IRS Form 8300 within 15 days of receiving that payment. Not someday. Not eventually. 15 days. Miss that deadline, and you're looking at penalties that can snowball quickly. Now, I want to pause here for just a moment, because I know this is a lot to take in. And I want to say this clearly and warmly, because it's important: none of this is meant to frighten you. Knowledge is your greatest protection. The seniors who get into trouble with these rules almost always do so not out of dishonesty, but out of simple unawareness. And that's exactly why this video exists, because you deserve to know the rules of the game you're playing. Here's a beautiful piece of good news to balance things out, because 2026 also brings something genuinely wonderful for seniors. As part of the One Big Beautiful Bill Act, a brand new $6,000 senior deduction has been introduced for Americans aged 65 and older. This is a significant tax benefit that could meaningfully reduce what you owe, or increase what you receive back, when tax season arrives. However, it's worth noting that this deduction may be phased out for those with higher incomes, which is yet another reason why understanding your overall financial picture has never been more important. So what should you actually do with all of this? The answer starts with a simple conversation, with your bank, your accountant, or a trusted financial advisor. There's absolutely no shame in asking questions. In fact, walking into your bank and saying, "I need to make a large cash deposit, what do I need to know?" is one of the smartest, most protective things you can do. Banks deal with these transactions every single day, and they're there to help guide you through the process properly. Transparency is always your best friend when it comes to your finances. You've spent a lifetime earning, saving, and making wise decisions. This is just one more piece of knowledge to add to your toolkit, and now that you have it, you're already better protected than most. As we head into the final part of this video, I want to bring everything together with some clear, practical steps you can take starting today to make sure your money stays exactly where it belongs, safe, protected, and in your hands.